Hi from Andrea Unger, Myths of Trading. There are some sentences or myths often presented, sometimes comments below the videos, sometimes on forums and so on, and I just want to spend some words about some of them. One One of the most common is psychology is 90% of trading success. I discussed about psychology in a previous video, and I can state from my point of view that this sentence is not true. Psychology is important, of course, but what does it actually state? It says that once you have a trading plan, you should do your best to stick to the plan, to do what your plan, what your training setups and whatever recommends, and avoid to be overwhelmed by emotions and then make mistakes because of the emotions. This is very true, but obviously if your trading setup, if your plan is bullshit, you will lose. You can be as psychological as you want, but if you have some rubbish in your hands to trade, you will lose money. It's like going on a diet. If you want to lose weight, you have to stick to a diet and be very strong psychologically to lose weight. It's true. But if a diet says eat pudding, breakfast, lunch and dinner, maybe also as a snack, I sincerely doubt you will lose weight as you desire. A nice diet, by the way, but probably it will not produce the effects that you are aiming for. So psychology is important, but in my opinion, not to that 90% claimed in some part of the industry. Another myth is about the importance of the exit setups on a trading system. Exits are even more important than entries. I don't think so. I personally don't think so. I believe exits are important, but not more important than entries. In my opinion, exits are there to stop a trade in the moment when the setup, the reason why the trade was open, disappears. When that reason is no longer there, it disappears. The reason can disappear when the move against the trade is too much, stop loss. When you believe that the impulse of a trade exhausted to that level, take profit. When you believe that the effect of the setup lost importance because time went by, time stop, or when you believe that psychologically you don't want to give back too many profits, trading stop, and maybe some others. But in the end, you have reasons to close something that you opened, and these reasons are still related to the entry setup. I've discussed in some previous videos how some specific exits are linked to the entry setup because of the type of setup. So the entry setup, in my opinion, still rules. Exits are important, but to claim that they are more important, in my opinion, is only a way to depict as some magic in your development skills that is not there, and you just want to show something that you want to depict as particularly clever, which is not necessarily. Another myth often discussed is about the risk reward. I already mentioned something about the risk reward 1 to 3 in a previous video where I stated that the necessity of a take profit, which should be at least 3 times the stop loss, is absolutely not true in general terms, because it depends on the kind of strategy, or the type of strategy we are trading. In counter trend, it is a case where some, and most often, stop loss is even larger than the take profit. So actually, it does not apply there. But interestingly, I was discussing yesterday with a trader in a hedge fund, a big hedge fund in the eyes of retail traders like we are, a small hedge fund in the industry. It's about €500 million under management, so it's big from our perspective, small from ours, but still important. And he said that a program, a strategy that could deliver 10-15% a year annual with a drawdown of, listen, 25% would be well accepted by the industry. 25, 10%. I mean, in our years, we normally hear 10%, 3% drawdown. So is the industry, the industry is people who have money, people who are willing to invest. Are these people so stupid to invest in something that delivers 10-15% annual in front of a 25% drawdown? Or are maybe we, the stupid ones, who believe that that is bad? Probably the second is more true. And it is. The point is that the strategy with 10% return annual and 3% drawdown simply does not exist. If it existed, it had billions under management. It does not exist. So the industry knows that the product with 10-15% annual return and a 25% drawdown is a good product because it is something that is possible and in line with some of the best, let's say, overall products, provided, obviously, that 10-15% on an annual basis is really annual. It means year after year after year, many years, not 3 years or so. So the strategy must obviously be promising from many points of view, but as said, the industry accepts something that is a bit against our imagination about the scenario of a good risk-reward strategy. This is something which is very important. So what I want to say, these are just 3 of needs in trading, and I recommend to be always very critical when you read sentences claimed, especially from somebody who maybe has not a proven experience in trading. Most often sentences are there just to impress, and this is obviously tricky sometimes. But you have always to analyze critically what you read and think about that. Think and consider. The only way to properly consider what you read is to study, to make research, obviously, and to be curious. I always recommend to study because it's the best way to build yourself as a trader. That's it. If you have needs you would like to discuss about, please write them in the comments. Maybe we I don't know what this word should be. We shoot another video discussing about those and also discuss about the 3 we commented here. I'm here. We see you next time, next video. Ciao from Andrea Onga. Enjoyed it? Click the link below and you will be noticed as soon as new material is available.